All right, so get this. Imagine a world where instead of chasing hot stocks, trading success was all about how well you manage risk.
Mm,
That's the surprising philosophy of FTMO,
right.
this company that finds and funds traders.
Yeah, it's really intriguing, isn't it?
Yeah.
Like, flip the script.
Totally.
FTMO isn't looking for the next Warren Buffett who can just, like, predict the market.
Right.
They're looking for people who understand that discipline and risk management are the real keys to the kingdom.
Okay, now you've got me hooked.
Yeah.
So they find these traders, and then what? They just hand them a blank check and say, go wild, but manage the risk.
Well, not exactly.
Yeah.
They have a very rigorous two-step evaluation
Right.
to weed out the gamblers from the strategists.
Yeah.
But here's the kicker. If you pass, you're trading with up to $200,000 of their money.
Wow.
This isn't some online simulator. We're talking serious capital.
$200,000. Talk about pressure.
Yeah,
I can see why they place such a high value on risk management.
absolutely.
So how does this all play out in the real world?
Right.
You sent over a story about one of their successful traders.
Yeah, this trader's journey is a perfect example of how FTMO's philosophy works in action.
Okay.
And it's not for the faint of heart.
Really?
Just 2 days in, they hit a major roadblock, a loss of over 4,500 euros.
Ouch. That's got to sting.
Yeah,
I'm guessing most people would be ready to throw in the towel at that point.
you'd think so, right? But this trader was different.
Mm.
They didn't panic or abandon their plan.
Right.
Instead of emotionally reacting, they stuck to their risk management strategy.
Wow.
They adjusted their position sizes to weather the storm, and that's where things get really interesting.
Okay, I'm on the edge of my seat.
Yeah.
What happened next?
This is where discipline pays off.
Okay.
By staying the course, this trader was able to recover from that initial setback and ultimately ended up turning a profit of over $22,000.
Wow. From a 4,500 loss to a 22,000 profit default. Talk about a roller coaster. So how did they manage such a dramatic turnaround? Was it luck, genius, or something else entirely?
That's the million-dollar question, isn't it? And the answer, surprisingly, is much less about magic and much more about strategy.
Okay.
This trader's success can be traced back to their consistent approach and disciplined risk management.
Right.
It's about understanding that trading is a marathon, not a sprint.
All right, so let's break down this winning strategy.
Sure.
The article mentions some specific numbers, 75 positions, an average of 5 lots per position.
Right.
For those of us who don't speak fluent trader, what does all that mean in plain English?
Imagine for a second you're playing poker.
Okay.
Each lot is basically like a poker chip with a specific value.
Okay.
This trader consistently bet 5 chips each round,
Uh-huh.
regardless of how confident they felt in their hand.
So instead of going all in on a hunch,
Yeah,
they stuck to their game plan.
exactly.
That takes serious discipline.
It does.
But what about that risk-reward ratio thing, the RRR?
Yeah.
What's that all about?
The RRR, it's like a built-in safety net for your trades. It tells you how much you're willing to potentially lose for a certain game.
Right.
This trader aimed for a 1.66 RRR.
Okay.
So for every euro, they were aiming for a 1.66 return.
So they were playing it smart,
Exactly.
not swinging for the fences on every trade.
Right.
But how does that actually play out in a real trade?
Sure.
Can you walk us through an example?
Absolutely. Let's say the trader bought gold
Okay.
and set a stop-loss order.
Okay.
Think of a stop-loss like an emergency brake on your trade.
Got it.
If the price of gold starts going down, the stop-loss automatically sells it at a certain point to prevent a major loss.
Okay. That makes sense.
Yeah.
It limits the downside.
Right,
But this trader didn't just set it and forget it, did they?
right.
The article mentioned they were actively managing those stop-loss orders.
You're exactly right.
Okay.
What's fascinating is that as the trades moved in their favor, they adjusted their stop-loss levels to lock in profits along the way. It's like progressively raising the emergency brake as you climb a mountain. You're protected if the market turns against you, but you're also giving yourself room to reach new heights.
So even with this super disciplined approach,
Right.
they were still adapting and making strategic decisions in real time. It's impressive.
Yeah.
But you did mention earlier that even seasoned pros have room for improvement.
Right.
Did the article point out any areas where this trader could up their game?
It did, and this actually reinforces the importance of constantly learning and refining your approach.
Right.
Even though this trader found success, there's always room to grow.
Of course.
One area they could work on: patience.
Okay.
The article pointed out that there were a few instances where they jumped into new trades a little too quickly after closing others.
It's like they say sometimes, the best trade is no trade at all.
Exactly.
You've got to choose your spots carefully.
Right.
So this trader sounds like they have a really solid grasp on managing risk,
Yeah.
but were they trading all sorts of complex financial instruments? Was it all derivatives and hedge funds or something a little more relatable?
You might be surprised.
Okay.
While they did trade some currency pairs like the euro and US dollar,
Right.
their most popular instrument was actually gold,
Really?
something most people are familiar with.
Okay, so this isn't just for Wall Street hotshots.
Right.
This risk management thing applies even to assets you can actually wrap your head around.
Exactly. And it wasn't just gold and currencies.
What else?
They even dabbled in a bit of Bitcoin.
Wow, Bitcoin.
Which just goes to show that these principles can be applied across the board no matter what you're trading.
They weren't afraid to ride the crypto wave?
Yeah.
You know, it's funny. We've been talking about this one trader's success story,
Right.
but the article mentioned something interesting about FTMO's overall philosophy.
Okay.
They seem to value this risk management approach in all their traders, not just the outliers.
That's a really insightful observation.
Yeah.
And it speaks volumes about what they believe leads to sustainable success in trading.
Yeah.
It suggests that maybe, just maybe, being a great risk manager is more important than being a master stock picker.
So they're not just looking for people who can pick winners. They're looking for people who know how to win, period.
Precisely. It's not about always being right.
Right.
It's about knowing how to manage being wrong.
Yeah.
And that's a powerful concept.
It really challenges the conventional wisdom of what it takes to succeed in trading.
Yeah.
Instead of chasing the next big thing, maybe it's about consistently managing your risk and letting the profits follow naturally.
It's like building a house. A strong foundation is more important than fancy finishes.
Right.
You need that solid base to weather any storm.
Okay, I'm starting to see the light here.
Yeah.
So it's not about eliminating risk altogether because, let's face it, that's impossible in the world of trading. It's more about managing that risk so it doesn't blow your whole house down.
Exactly. It's about having a plan for when things go wrong.
Right.
Because they inevitably will at some point.
Yeah.
Even the best traders in the world have losing trades. It's how you handle those losses that separates the amateurs from the pros.
This has been a real eye-opener.
Yeah.
And I think a lot of our listeners are going to want to rethink their own approach to trading after this deep dive. So for those of us who are ready to trade a little smarter, what's the key takeaway from this trader's story?
Well, their story is proof that consistent risk management isn't just some abstract concept. It's the secret sauce that can transform your trading from a gamble to a calculated endeavor.
Okay.
It's about respecting the power of consistency.
Right.
Just like building a successful business
Yeah.
or mastering any skill.
Yeah.
It's about understanding that slow and steady wins the race
Yeah.
in the markets, just like in life.
Words to trade by.
Absolutely.
And on that note, we'll wrap things up for today.
Sounds good.
A huge thank you to our expert for breaking down this complex topic in such a clear and engaging way.
My pleasure.
And to all of you listening, keep those deep dive requests coming. We'll be back soon with more insights from the front lines of knowledge. Thank you for watching. Don't forget to check out the description below for more content related to today's episode. You can listen to our podcasts on various platforms. Plus, we have an exclusive offer for you. Use our discount code to get 10% FA off and potentially save up to $120 on your first purchase at FTMO. If you enjoyed this video, please like, subscribe, and share your thoughts in the comments below. Happy trading!